First and foremost, anyone who's asking about the MyFX book, I gave up after 3 weeks. I was just investing too much time into it. I tripled the account and then went 50% on one trade, 50% on the next trade, then I had 25% left over, and I was just like, stuff this, man, I'm withdrawing it. I was wasting too much time, like, because I'm doing account management at the same time. I was investing just way too much time in that, and I just couldn't give account management my 100% because I'm there trying to take it on a small account and then flip back over to the big account and go back to the small one. It was just too time consuming. And the irony is this sort of proved it, that it's almost impossible to flip an account with high risk, because the low risk account is up 75%, trading 1% risk. And the one which I went 5, 10, 20, 50% on was down 75%, and they were taking the same trades. So, you know what, let's just say the test worked. But yeah, that's that. And then in terms of basically what this video is, I want to show you guys how to get sniper entries. Now, someone showed me this ages ago. What we're doing, we're focusing on sniper entries today. Now, a lot of you may have seen on Instagram, you've seen people with like 5, 10, 15 pip SLs, and they're catching these huge swinging moves, right? So you might be asking yourselves, how do they do this? Okay, so now I want to try and keep this video. I've got 8 minutes left to make this video because I want to keep it under 10 minutes. So I'm gonna show you first what I'm looking for, like how I'll take the trade, and then second, I'm gonna actually show you how to identify this exact pattern so you can do it yourself. So I'm gonna cherry pick an example because this is something that you should sort of develop and put it with your own strategy so it can run side by side. Okay, so this isn't something where as soon as you start trading this is the be all end all. This is something where I want you guys to incorporate it, whether you're using moving averages, Fibonacci, whatever you're using, I do not care. Just incorporate this, and I'm telling you, you will get precision entries. Now, you can do it on a daily, weekly, monthly time frame, 4 hour, 1 hour, 2 hour, 5 minute, 30 minute, 10 minute, whatever you want to do, it doesn't matter. Just find the combination that works for your strategy and how you want to trade. Okay, so what I'm looking for is a high. You might call it a pin bar candle, whatever it might be, but it's a fractal high. Now, a fractal high is a candle where you've got, sorry, it's quite hard to draw a straight line. So you have a high like this. To the left of the candle, you have a low, and to the right of the candle, you have a low as well. And then what will happen is the candles will sort of just fade off like this, and then you can basically identify that this candle here is the fractal high. You see? And that's a fractal high. So I'm going to mark out some fractal highs for you. So this is a fractal high. This little one here is a fractal high. That's a fractal high. This is a fractal high. And then this is a fractal low. That's a fractal low. One of these are, I can't tell the difference. This is a fractal low, that's a fractal low, that's a fractal low. It's basically where the market pivots, okay? But there's a very specific rule set. You have to have the candle, you have to have either side. So the middle candle, there'll be 3 candles. The first one will go like this, and then you'll see a sharp wick, and then the other candle will be like this. If you just search in fractal high and lows, even on indicators, I'm pretty sure there's an indicator for a fractal high and low, it marks it out for you. That's what we're looking for. That's the most important thing. Once you've identified that, all you do, you grab your horizontal ray. I find it's easiest and turn magnetic on, so you can literally catch the high and the low. You see, just like this, really quickly. So once you've done that, you mark those out, and if it coincides with your strategy, so say we've got some major resistance or whatever you want to say up here, wherever it might be, what you're waiting for on the hour time frame is for price to go up and wick it like this. If price closes through the candle like that, the trade becomes invalid. You're not taking that trade. You want to see a short, sharp rejection into this region up here. It could be due to lack of participants, could be due to the fact that they don't want to trade the price up there, could be due to the fact that there's a big seller up there. Any number of reasons, but the price has gone in and come back out, and they're not happy at that region. So After we've got this, we wait for the hour to close. So you're not waiting, you're not watching it wick in and out and you know, suddenly taking the trade. You need this hour candle to close. So this 10 a.m. candle is now closed. We're now on to 11, and bang on the dot, as soon as it hits 11, you drop to the 5-minute time frame. And what you're doing, you're marking out the fractal low. Now, people call this market structure or whatever you want to say, and you might see all these annotations like MSB or MS, whatever it might be. So anyway, we've got MS. Let's just say let's call it market structure. That's why. That's why. Okay, so there we go. We've got some market structure here. Now, what's happening? Right up here, that quick surge, that huge surge upwards. These are all buyers, right? These are the last buyers before the price pushed the candles back down. Okay, so these are the last sets of people that had control of the market before it suddenly sold off. So that means below this price level here, what are there? Sellers. Okay, so people underneath here are looking to sell. So what we're doing, as soon as it's closed, we're then marking out a limit order. You can do market. You can do a market execution. It's up to you. Like I said, how you trade. And we now need this on a 5-minute time frame to close below here. You can't just take an early trade because sometimes it will rally back up and go through the SL. So this is one of the filters we do. Okay, so once it closes, there you go. It's closed below. We're now looking for a retest. We got the retest, and now we're waiting for the sell-off, and there you go. So that's how you see people with, like, look, a 10 pip SL, they catch these crazy moves. And I'm not here to tell you and say, you know, this is what you do, this is how you cash out. Like, the whole point of this video is to show you how to get the entry. Okay, it's up to you, entirely up to you. People might cash out at the lows here. People try and target the wicks. People try and target the swing low. People try and target the majority of where the lows are at. You might be doing a strategy where all you want is a 1.5 to 1. Doesn't matter where it is, you're just going for a 1.5 to 1. As soon as it hits 1.5, cash out, you're at the market and you're looking for your next trade. Okay, let's do a buy example quickly. What people tend to do is, I'll show you an example. They'll pick all these lows, mark out here, they mark out here, they mark out there, they mark out here. Okay, and I'm sure you see people with lines like this. They'll wait for price to wick like this, and what we do, this is the whole point of the filtering. You go to 5-minute time frame. Where does price need to break? Price, if we want to buy it, needs to break this level here because it's the last fractal high before price touched this area down here. Does it break it? No, it drops lower. So now we drop back to the hour time frame. Price is doing it again. What do? There you go. Drop to the 5-minute time frame. Where do we need price to break? We need price to break this level here. Okay, because that's the last fractal high before what? The market went down. Okay, so guys, I hope this is very, I'm trying to keep this very simple in terms of how to do it, but what we're looking for is a break here. So the most important thing is a break of this high, which I'm marking out. Okay, and then what I like to do is do this. And sorry, I'm talking like I'm speaking like I trade this. I still trade this. I don't trade this. So just to be clear, yeah, I got access to the banking systems all on my computer, so it's too easy. Honestly, I just sit here laughing every day I go on. It's just too easy to trade. Anyway, so look, we're waiting for a break of this structure. You can see price isn't breaking it. It's not ready to go because there's still some people selling up here, or they just want to trade. They're happy in this region down here trading. So wait for the break. Any second, there you go. So now we're waiting for the retest. So we're not in on this trade. I'm not saying, oh yeah, we're in on this trade. If it doesn't retest, it's not retesting. So we're not going to take the trade. That's how you do it. And if you're not going to be strict with the rules, then don't trade it at all. So unfortunately, we missed out on that scenario there, which is quite frustrating. But as you can see, price has flown up. We're going to go back again. Let's find one more example. And then, yeah, like I said, I'll do the rules for you. So as you can see, price has closed inside here, that invalidates the trade, so it wouldn't be taking that trade. Closed inside, so it validates it. Here, there you go, you can use this low. Okay, 7 a.m, this would be the 8 a.m. Close. So once the candles rolls onto here, it's going to be 8 a.m. Where was the last fractal before price tapped inside here? Just there. Okay, and what do we call this? Call it whatever you want, but I'm just going to call it market structure, keep it simple for you guys. What we're doing, limit order, SL at the last low. That's an 18 pip SL, 19 pip. Retest back in here. And then, like I said, that's how you get that entry. And then, depending on how you want to manage the trade, you can manage it in your own way. But this is, look, this is. I'm not trying to lecture you guys and tell you this is the way to do it. But if you guys are watching and confused at how like people are getting these precision snipe entries, this is how they're doing it. Okay, obviously there's different like type of things people use. You know, people got like RSIs and MACD and all this other stuff, but if you're looking to just try and use pure price action, this is it. If I was trading price action, I'd say this is the way to do it, and just coincide it, like put it together, run it parallels in parallel with your strategy. If it's moving averages, Fibonacci, horizontal levels, whatever you're doing, run it with this, and you will get some precision entries. I hope this has helped. I'm trying to just give you information that you know you guys might find useful anyway. Hit the Instagram up, give it a follow, much appreciated.